What up? Good morning. Happy Sunday, everybody. We have a rainy day over here in Nevada. I don't know how your weather is. Hopefully, you are still having a great day. Even though many are concerned lately with the price, hopefully, this can kind of give some sentiment and confidence that you can find that we're still on the right track, still going in a upward direction. And then also maybe this will give some people some confidence or some tools to be able to use for themselves, not only in the short term but also the long term as they start trading and investing in TXC and maybe some other cryptos as well. So what we're looking at CoinMarketCap. Currently, price is showing 310. We got our little stats. These are not the most accurate on CoinMarketCap because we're not verified yet. And um, we're on the right track for that. Even with the downward price action, we're probably actually more on track to be getting verified. Getting verified on CoinMarketCap will get the big exchanges, and that will create a parabolic type move for the price. So let's just kind of stay the lane and stay the course. But to kind of get into this, we're going to go real quick and jump into getting what we got. So all these candles are a day, 24 hours how CoinMarketCap marks them, but it's basically a daily candle. When you're looking at the candles, just to kind of show you, these up here are called wicks, and then this part is called the body. The body of the candle, when it's green, means that the bottom of this was where it opened, and this is where it closed on the day. When it's red, this is where it opened, and this is where it closed. The wicks are the points plotted, basically, of the high of the day and the low of the day. When the wicks are bigger than the body, you're typically going to see some uncertainty. There's going to be some erratic price movement, whether it be from volatility because of good news, bad news, a breakout, a high FOMO parabolic move, and then trying to figure out the price discovery and where we're going, if it's going to withstand. At this point, we're seeing, real tight window because we're at point of interest in the path to 16. So we started seeing some kind of wick action. But for most of the time, TXC hasn't seen very many big wicks or big moves throughout its life. May is really the time frame that we kind of started seeing trading volume pick up and investing volume. Prior to that, it was very limited because it was only mainly on DEX trade, and then it added Bitmart for a US-based token, being only available really on non-US based exchanges. Kind of makes it tough to get a lot of traders involved, but hopefully soon we will see that awareness and volume increase as it gets more available to US investors. So I'm not going to throw a lot of indicators. Indicators are kind of a tool that you can use. There's a ton of them. When you go through the indicators chart, there are a ton of different ones that you can use. What I would say with those is check them all out. You might see some that you like. You might see some that are just confusing. The biggest thing is you just want to see what ones make sense to you. A very simple one is this moving average. It is going to be based on whatever duration you're using. What are we doing? Is our auto not? Are we auto not filling anymore? And these indicators will typically automatically plot the points or create the actual image. So you don't have to worry about I don't know how to make a moving average on the 9 daily. Once you put it in, it just does it for you. But one thing that I like to do, still not is I normally like to change the colors and make them a little bit bigger, and you can always change them to a 9-day or a 90-day or 180-day or 200-day, 50-day, whatever days you kind of want to do. The longer you're doing, it's kind of more for a longer term trend and such. One thing that I always kind of do is the market follows the threes. Power of three is very prevalent in the patterns and durations. So anytime you're doing any kind of duration or plotting, I always like to use a multiple or a factor of three to the components. So 3, 6, 9, 12, all those kind of things continue on, and you can kind of see that those will do. But on some indicators, you can actually use different numbers, and it makes sense. So again, just kind of use what makes sense for you. To keep this one simple, just going to use the 9-day, which is roughly 2 weeks or a week and a half of price action. So to see kind of these trends and these channels that I like to focus on, especially for seeing good entry points and trading points, we're going to come back to these candles, and you can see most of these are all very small, tight candles. We have breakout, breakout, breakout. So kind of our first big move back in the May time frame, around 6 months, is this one on May 7th. Line up my crosshair to the bottom of it. It doesn't have to be exactly precise. Like, don't get crazy. Like, oh, I missed the bottom, or I missed the wick. Obviously, it's nice to be precise and nice to be very accurate, but for the most part, you'll be able to see it, and it's mostly just a visual. It's not law. It's not like this is the floor, it's never going to go below, or this is resistant, or you're going to get it to the exact penny. Because a lot of times you'll see that it's actually a certain window around it. But if we kind of go out, the cool thing about the ray is it gives you your starting point, and then it extends out all the way continuous. There's other ones you could do an extended line, which will go both ways. There's no real point in using that one on TXC because there's not a lot of stuff going on before May. Mostly just early miners and trading bots kind of developing a market of circulating coins, which we'll get to in a second. But whenever you're doing these trend lines, you want to look for multiple touch points, multiple contacts. The more touch points you see in a trend line or in a channel or on anything like that, on any of your indicators, it's confirmation that it's an accurate resistance or support point. So we're going to come in. I like using the wicks because that wick type move where it kind of goes up and then rejects is more confirming that is a point of resistance or a point of support, because it bounced off of that and the price came back. So we're going to find one of these little lower wicks on this day, and we're just going to pick one. It's not off, but we're going to pick that one. And we're going to see, boom, we had some touches, and then we kind of broke away from it and started getting into a good move up. So we zoom out a little bit, and we can see that, look, we're still well above it. Getting very close. There is going to be a test, most likely, unless, sentiment or some kind of macro event happens that creates, sentiment to change. But based on the direction that we're going, we're probably going to test that trend line. And that's okay, because if you look, that is a pretty bullish trend path. We're going to forever go up kind of thing. We are looking forward to higher prices, so let's keep that intact. But we had a pretty big last 3 months happen where we had a FOMO type run-up breakout. The market got really excited about Asia and the potential of outside investors who were going to come in, and they weren't going to be mining, but they were going to buy and trade the coin. TXC was presented to a bunch of crypto millionaires and very accepting or very familiar people with crypto, so there was a lot of hype and buildup. Caused a little bit of a premature price run-up, but this excitement is fun and gets a lot of people's attention. This is really cool. Of course, everybody wants this to continue, and that's not realistic. So what happened is we had a fallback. Cool thing is this trend line of these 9 days average prices showed support. And then once the price broke below it and had a full candle below it, then it kind of became resistance. Tried to get up, and then it was resistant. The nudge was the sentiment change that caused the big breakout to go above it, and then we had some support on it, and then of course we broke below it. So now this is resistant again. And realistically, if you go from September through October, it was more resistant than it was support. But if you look at every other time before, support. So that 9 daily average kind of shows that there's a lot of accumulation with TXC, and a lot of the sentiment hasn't changed. We don't have an erratic breakout away from it, and we don't have an erratic break below it, which is good, but it's also a lot to do with because we are a very small early project. The market is going to be very sensitive to either way the direction changes, meaning where these prices will go up very quickly and prices can come down very quickly. But everybody's really concerned right now on the price being down right now, and what's causing that. What's causing that is there are a lot of brand new millionaires in the world from TXC that benefited from it. So when we kind of look at this range right here, we see that this was kind of a support kind of line, but when we broke below and shot back up, this was a good low line. So we're looking kind of in this time frame or this area, and these are all really tight bodied, and we're looking for that first kind of wick, big wick. So we go touch that wick. This can't be yellow, purple, or this is going to be yellow because purple is for the long positive uptrend. So we see this bullish trend from the long term and the more medium range short term downtrend coming together. And we already know that was that big, but we created that confirmation. We're waiting to see this next confirmation move up to kind of see that. But to kind of see the bottom of this down trend, we have a wick here, we could use this line if we want to be more extreme, but I really like these two wick points because this was the first kind of recovery wick, and then add a wick larger than the body below and a wick larger than the body above, and then this was kind of like that inflection point where it was like, I don't know what's going on, we got to figure out what we're doing. We tested the bottom support, we tested the top support, so that's a pretty good plot point to kind of see that the market was holding. So if we do that line, and we can see that these are almost parallel. Parallel channels will always kind of will hold some extra strength because as the channel is parallel, that shows that you have your resistance point and your support, and they're going to be moving in a similar path and distance. So just a little bit extra strength in those when they are more perfectly or more precise parallel. But what we're seeing in this is, look at that, we are coming into a test point of our long-term uptrend. These are just intersection points. All these intersection points are potential breakout points or reversals. But anytime you see them kind of on the long term, they're always kind of going to be kind of a magnet. So I look at this one and then I look at this one, and we're up to 330. So kind of in my head, I'm looking at from 3, we're going to have a move to 330, 340 in the near future if it's holding the uptrend, and that's going to be the first kind of test of resistance to see if we can get back up. And that's based on the downtrend channel and the long-term uptrend channel. We could also plot uptrend channel that we want from the long term. If we go back to May, we could look at these kind of double-bodied candles where the oop, stay on me. There we go. The mouse is a little sensitive. Must be losing batteries. So if we look, these kind of show anytime you see two candles where there's no wick on either one of them to either the top or the bottom, that kind of is like a really strong assertion that there is a wall there. There is a resistance wall there. And just the same when you see like two wicks, like this one, two wicks hit and hit the same point and fall back. There is a wall there of resistance. So when we're plotting these trend lines to find channels, we can use these as points to see the moves and where that resistance point is going to be at in the future. If we go through it, we can see that there was our breakout above it and the big candle it took to break below it. A lot of times around those you'll see bigger candles because the momentum will pick up. You know, those long-term buyers that were holding and that support breaks, all of a sudden they kind of do the pause. And anytime there's a pause in whether it's buying or selling, the move in that direction is going to be accelerated because the buyer or the seller, depending on who's pushing and who's driving, is in control and can kind of do what they want until the other side steps in. So now we got a couple lines going crazy. But let's go back into this tighter 3-month window and see some horizontal channels. We're seeing the diagonal ones as trend lines. There are some consolidation zones that we're going to be on, and we can see the support and resistance. So let's change this to a horizontal ray. And what are we looking for? We have wick, and then a lot of kind of similar action and a wick. So if we kind of come across this, we can see that there was a lot of action here. And if we look at the price, it was $3. As much as the market loves the power of the threes, it doesn't necessarily follow 33 cents as much as it follows whole dollar increments. The psychological part of investors and traders is whole numbers, $1, $2, $3. Those become resistance points. If I bought something at 50 cents and I doubled my money at $1, that becomes a selling point of interest for profit takers. If you're getting something at $3 or $4 and it hits 5, 10, 15, 20, those also are psychological numbers that people just naturally convert to for profit levels in their head when they're trading and with money and stuff. So those are always going to be points of interest as we go. Whole numbers, dollar increments, and especially in the 5, 10, 15, 20, 25, 30, and beyond. So we see that one was pretty good, and we're testing it again here today. And that's okay. This rounding also shows us that there was support there. And it is confirmed with this long look down and bounce. So let's do another horizontal. I'm going to line it up, and I like looking all the way across, kind of just following and visually seeing where wicks touched, and a lot of candles get tight and form around. And then I go look back, and I'm like, oh, look at this. We have a whole body candle close, and then followed by another tiny candle that just stayed at that price, and then very tight wick to body before the move up. So that looks like a price of interest to me, and 370 was a pretty good price that we recognized from the October price target of 379, and that was where that liquidity injection came. That liquidity injection, not a floor, but more like a shelf, creates support because that becomes a point of interest. When there is an injection of a lot of money is at this level, or a lot of money is at this level, and a lot of money is at this level, it will be protected because of the support and such. So we have a nice little horizontal channel here that we're in. already. We have our long uptrend channel, and we have a downtrend channel. So all these points are going to intersect in this window right here, and we're in this little Bermuda Triangle of which way are we going to go kind of thing. Who's going to be the most support? Who's going to be the most resistant? What's going to win? And while this pattern would typically be sounding the alarm and causing a lot of panic, you can't with TXC. TXC is still a very, very small market cap, and the way that it's designed actually needs people to sell. Sellers are the only way that a investable market will exist. If everybody was just holding, we would not show any value, and it would be just a bunch of miners holding all 58.64 million of the coins. And majority of those are being held and not in the live market. Even though it says that it's a circulating supply, that's just because they're the ones that are available. This max supply is once the mine is fully done in 130 plus years, 135 years. The total supply is what's been mined so far. If everybody tried to sell and got rid of all their coins, that's how many coins would be sold. But what we're seeing with TXC is the volume is not that. So if we kind of come in here into the more August time frame, we're not in December yet, so it's a little bit tighter. This is when a lot of our price action has been moving. This is where a lot of the coins have been traded and volume is traded. So when you're looking at coin market cap, we're looking at the volume down here. Let's just kind of find this little like middle point where we see a lot of touching and kind of the average of where we're at. So this average, I don't want it to be red because red is going to blend in. So let's make it this cayenne blue. So that's 289,000, 289 and a half, call it 290, kind of is what that is. That is dollars. The dollar amount of coins traded based on the closing price that day. So when you're looking at the ones in August, this big day, where we had August, so let me stay on there. Oh, you can see 211,700 or 211.77 thousand. That is dollars based on the closing price of 213. So that's really close to 100,000 coins were traded to create that volume that day and put in the circulation and moved hands. When you come over here to just do, I don't remember what day that was, but let's pick one of these days, kind of on our average. We had $313,000 based on the closing price of $392. Less than 100,000 coins, probably like 70,000 coins, in that range. So we had less coins being traded versus back here, where even though our dollars is up now. So this volume looks good to investors and people on the outside because of the trading and how it's scanned. But in my eyes, I'm looking for more of the circulating supply to show increase in participation. Because if you look at what we've had to see recently, specifically kind of the craziness in October, is this day right here is probably the saddest day for TXC. October 26th was after the nudge, and this is kind of what created the downfall of what we're in now. Is kind of where I look back and see it. There was $156,000 worth of TXC traded at 5:30. Something like 26,000 coins or 27,000 coins. Hardly anything. And that's because everybody was bought up. All the orders were bought up by the nudge. That liquidity was injected, and then no seller had placed their order yet. Was kind of waiting to see the price and see how high it would go. And because they don't want to miss out from this one. This one ran up, and then you can see a lot of action actually was here on the way down after the price stalled. So price jumped up and got to that level. What happened? Everybody stopped buying, um, even at that price. I think everybody was celebrating and so excited. Oh my God, we're 10 out of 10 on the path to 16. This is great. It's going to be $7 next month. We're ahead of schedule now. This is phenomenal. Whoopty, whoopty, whoopty. Everybody forgot to go make sure that they still got their coins in. So as this kind of came back to earth, and then some sellers started stepping in, this day was probably another hold for the liquidity injection, but October 27th, 29th, 30th, 31st, and the 1st was 4 straight days of selling pressure. And that created this downfall, one last little hoorah before selling pressure, selling pressure, selling pressure, selling pressure. While as the price was going down, more sellers themselves were wanting to get some of the profit. Because you got to think that a lot of people had either bought coins in the cents price range, or have been earning coins for 18 months back when there was less than 1,000 miners, and we were still getting the same amount of coins mined. It was just distributed against 1,000 people versus 40,000 people. So they have a huge amount of coins that they could be selling and catching some profit and making sure that they get a decent number. So the other thing that kind of kicks up on top of that is sellers are in control, buyers are hesitant to buy. Buyers are now trying to get a deal on the price. They're not buying it at market. There's no excitement in buying that there was on the way up that created this. And everybody was hoping that TXC was just going to keep pumping in liquidity and hold the price. And thank you, so we could sell and get our profit. Well, if the liquidity is only used to push the coin up or dictate the coin's price, none of that liquidity is going to be able to use to build the mines, build out the network, continue the promotions and marketing and building to continue to get new people. We don't want to just trade amongst our 40,000 selves without any growth. We need the liquidity for in the future. At 10 and 15 and 20, there's going to need to be some liquidity injections added to help support that price. And that price is going to be much harder to hold than 5, because instead of 40 millionaires, there's going to be 50 millionaires that are wanting to get some profit, retire, change their life, or do whatever. So it's not worth just dumping all the liquidity just to hold this price, especially considering it's 5 months early. The market has to show that we are willing to support it. And as investors that are trading, as mining participants and all, if you really believe in the project, you should be buying any amount in the single digit range, because you believe in 16 and you believe in 80 and 30 and 40 and so on and so forth. So what did pick up is we have actually started to see a rise in this average after that selling, because now we're into the 300s at 3. We're back up to like 100,000 coins in this range, which is kind of the solid building. And that's why we're starting to kind of see some roundup in the price here. And we saw the rounding in the price here, and we saw the attempted here. But why this is good amongst this really ugly chart is right now there's the top 50 wallets have way more coins than everybody else. The people that are trying to accumulate more coins might not be those early buyers, because they might deem that they have enough. The people that are kind of supporting the price are the more like the bottom 50 and the bottom 100, or maybe it's actually probably closer to like the bottom 5,000 holders are the ones that need to kind of come in and buy versus the top 50. That distribution of the coins is going to create a longer, more supportive trend that's a healthier build. And I don't fault these guys for selling. They very much deserve to. Because if you think that they bought back in May or April or beginning of this year, ignore that bit mark crazy bot trade. Get that out of there. These guys are buying at 40 cents up to $1. They bought all of it, got us up to $1. 500% of $1 is $5. They're making 500% now. That's great profit in a year or less than a year. So now we have people who are new coming into the investing or newly acquiring these coins that are buying in the $3 to $4 range. Well, what's 500% of $3? That gets us up to $15 again. So the people that are buying now are more likely to hold till 10 and 15, where the people that are selling now, we're probably going to sell at 10. They're probably going to sell at 7. They're probably going to sell the whole way up because they bought early. They bought sub 3. Well, once this thing gets over 7, over 8, there's going to be a number that's going to trigger them to where they're going to be buyers. So now that they took these profits and they got off, they got out of their bag or whatever, they're going to come back and look and be like, oh man, I messed up. I should have held all those. The good thing is that the coins are going to be distributed enough. That's going to get us verified on CoinMarketCap faster. That's going to get more exchanges, which will bring in new crypto investors who are looking for new crypto projects to put into their portfolio. And that's new liquidity that's not coming from the mining project. The liquidity from the mining project should stay building the mines. What needs to build the market is dollars. People that don't want to have their dollar bill that's devaluing and crumbling and want to get it into something, that's going to potentially build wealth and grow in value. Here's something that you could do. It's, buy now, hold, and, hopefully accrue a good little income. So as bad as it looks, it's not bad. This is actually really good. This nudge was probably a little premature, but the cool thing was it did stimulate the selling that triggered some of these whales to ditch the coins early. And I, for one, am very glad that they are selling now at 5, because it would be very, very hard to absorb their hundreds of thousands of coins at 10, where it's a lot easier to absorb their coins at 5. The buyers that are on this project for the long haul, don't hold your breath. If you can somehow find a way to, instead of trying to buy big chunks, buying, I saved up a whole bunch of money, I got $500, I threw all $500 in, and then I'm down. See if you can spread it out, and more of a dollar cost averaging investment. Dollar cost DCA or dollar cost averaging investment for something like this, where if you're looking at the long-term trajectory that you believe in 16, you believe in 40, you believe in 80, you believe in 800, you believe in 1,000, if you believe in the constant growth and value that TXC could bring to crypto, you need to be comfortable raising your average and not just lowering your average. If your average that you're holding in your investment account is $2 and you're never going to buy again because you don't want to raise your average, then it's going to be really hard for you to influence or have much control in the investment. If you support it at 2, support it at 4, support it at 6, support it at 10. And think of every investment individually. You're buying your $1 investment, you're trying to make 50% on that. That's $1.50. Sell it. It's okay to sell and take that profit. Constantly gathering the profit is constantly building the volume, which is hopefully creating more of a circulating supply that's steady, that's going to gain the attention of the outside investors. And that outside money, that outside liquidity that's not from the mining shares. Liquidity needs to come from without, and we just need to have a value and show that this is something that is worth holding on to and buying consistently. I'm going to post this on the Facebook group, and I'm going to do a little written write-up because I'm sure I rambled and I'm sure I got out of my train of thought. Again, I'm not a professional video maker. I'm not a financial advisor. I'm all self-taught on this. This is just me trying to show people what I see and hopefully give people some confidence. that they're okay buying this, and their sky is not falling. This is not a falling knife. We're not going to zero. I see nothing in this that is even remotely concerning. The lowest price that I see us getting to is this 280, and that would be a little bit concerning. I'd be disappointed. Um, but again, if it's the whales getting out, it's okay because I'm looking at the value that new investors are going to be able to get, the 280, the 3, the $4 buys now, that these guys are going to be able to make 500% in the short-term investments. And for people who were not early into the project, this is an opportunity to still get into that. For the people who don't have thousands of thousands of dollars in mining shares and getting hundreds and hundreds of hash, to where they're getting tons of coins, or if they only got in August, and now that we're only getting a half a coin, they're getting 15 coins a month. It's way easier to buy and invest to add to that. Granted, the mining shares are pivotal in one, building the project, so you got to have both. I feel, and then that way you're contributing to the growth of the project, but you're also keeping the value in the market. Because if everybody was just mining, there would be no value to the coin. It would be just a number on a screen that anybody could put and edit. But to determine the value, we need buyers. The money has to come in and show that these coins actually are valuable. The project is valuable, not just for phase 1, but phase 2, phase 3, and so on and so forth. It's not just an investment as far as a quick little flip. And if you are doing it that way, don't be mad at anybody buying and selling and flipping, because they're helping us. They're helping us much more than they're hurting us. There is a strong community, and you see plenty of people that are still in here buying. And if you think about it as we have a few sellers to the number of buyers, we have way more buyers in numbers. It's just a bigger dollar number of sellers right now because those guys were early. And then the buyers too, no shame on them. If they're looking at this as a long-term investment, why would you blindly buy as much as you can and not try to find a value? So I totally get what everybody's doing. Not mad at anybody, not mad at any price action. I like seeing this continued price going up. I want to see this trend be held. And as long as this trend is held, and even if it stays in this channel, I'd love for it to break above this channel. I'd love for it to get on top of this to where this becomes support. But if it never did, I'd be fine. Because if you're looking at this as of February and beyond, and even if we don't get to 16 by February, even if it's June, that's phenomenal growth and a great value that this project has become. And hopefully it creates some wealthy people and changes a lot of lives. If you have any questions, this will be on Facebook. And you can get me in the Telegram or on Facebook, whatever. Feel free to message me. Feel free to comment, because your questions, one, help me learning, because if I don't know, I have to go find out. I will always try to find the answer to any question that I don't know, which makes me smarter for the next question. So please ask away, and have a good Sunday.